What's up, everyone? So this morning, actually, the markets have moved quite rapidly. Now, this is fully anticipated, as we mentioned in yesterday's video. If you did get a chance to watch that, we saw that the DXY has been moving rather impulsive. And I think because of that impulsive movement, we knew this was a strong possibility that the DXY could just overextend in these areas and it may not just commit to a correction. I think this is also something which is very interesting, as we can see throughout this overall move. This has just been very impulsive, and given no real signs of a move to the downside. And I think with this very directional move, it makes a lot of sense because we've just had a huge amount of corrective price action, and now it's just found a floor and it's making this move away. Another thing to actually bear in mind is that even though we had this sort of, call it corrective price action, there was still a lot of trades in it and there was still a lot of opportunities. So in these areas, there's still a lot of money to be made, but in these areas, likewise, it's just different market conditions where we can still make money. So something to observe and just to understand and learn from moving forward into the upcoming years. I think just understanding this particular move can really benefit you in the future, as well as the level of capital preservation that's involved. If you were to get involved in trades here, there were trades. It just requires a particular type of lens. So anyway, without going into it too much, we can see from the hourly perspective as well, once we get zoomed in enough, we can see that there was no clear opportunities for us to get involved on the DXY alone. We could see that, we had a push, small bit of correction here, was nothing too significant, then it pushed away, created this bit of correction, pushed away, and now we're just breaking to the upside. If this by any chance came back down and did that, I wouldn't really hesitate on the short. It's just, I'd understand that it's still a part of a corrective squeeze, but that would still be good enough probability to then play the move back into these areas, and we could see something like this form for the future. So I'm not still completely crossing off the potential short, but understanding that we are moving to the upside and we don't have to have any significant reason to come all the way back down to the downside, if you know what I mean. The SPX, I think, again, just Monday momentum. We're just moving to the upside as usual. We haven't really had any signs of a pullback, any signs of any sort of continuation to the upside neither. So it's one of those ones where I would still stay clear. Of course, depending on your strategy, you could be taking some sort of trades in these areas, and I wouldn't say that this is wrong. It's just obviously this is not my typical patterns that I'll be trading. Obviously, I can see them and understand what's happening here, the accumulation within this area for it to then make the next move, and then you're playing the A to B. I just think I'm going to be waiting for something a little bit more clear and structured, and then if I do get what I need, I can then take a trade in an area where I can mitigate a lot of the risk and then go to the upside. So again, there's still opportunity there. I just right now it's in very high risk territories because we're just shooting to the dark. So one of those situations. So I was looking for shorts on the JP225, but we also knew that there was the possibility for longs. Early London session, we had signs of a lack of commitment in this area, and I think when we had that impulsive break to the upside, we kind of then got our signal. So if I just go into the hourly, we can just see for a second a little bit more zoomed in than we need to be, but we can see that we did have this whole section here, and then this is just acting as continuation for it to furthermore go to the upside. So we are looking at longs at the moment. We did see the potential for the downside to come into play, where we were looking at it potentially rejecting from these areas. We didn't quite get that, unfortunately, but we did get that corrective price action, which was a clear sign that this is not your typical sequence. And then when we had that, this is now pushing to the upside. So I would not be surprised if you did see price move from here to here over the course of today, and then on the daily you just see some heavy bullish momentum into those areas, and then in continuation we are looking for more upside. So I think that's really nice that we are getting that clear message from the market. When we look at the JP225 related pairs, Euro Yen, CAD Yen, Euro and New Zealand Yen, it's very subjective. EJ did have a potential sign of a very good short, which is nice, but again, like I said, if this is just going to be dramatically shooting to the upside, then a lot of money is coming into the yen pairs, so naturally we will see movement across the board on these yen related pairs. New Zealand US dollar, do you know what, the area of interest for the short is right, it's just it hasn't given me what I wanted. So again, it's now created that first touch floor, which is completely fine. This is completely anticipated. As we mentioned yesterday, I don't know if you did get a chance to watch the video, I did say that I will need to see some development over the course of the week for this pair. So the fact of the matter with this, if you're too zoomed in, you're going to be thinking, wow, it sold off, you know, this and that, I could have got in on a position. But when you do zoom out and you look at it, it's doing exactly what it needs to do. Right, it's accumulating volume in this area for us to then get the short. So I just need to be a little bit more patient, probably into Tuesday, Wednesday, most likely Wednesday, London session, the trade will be there and ready to go for us. There's no real clear news this week unless we go into Thursday, Friday. So, you know, we're good. We're really, really well positioned for the short. We just need to wait and see the development come through, and that's really it, really. So I'm quite happy to wait on this pair. Even though price could look like it's selling off, it still needs to accumulate. And if it does give us this, then we're in for a very, very good position to go short on not just New Zealand US dollar, but on the related pairs as well. Aussie US dollar, exact same situation. You know, we can see it here. It's created the footprint. We're now breaking the low, if so, coming back up, maybe near miss, and then come up again. And then we get that internal structure there. This becomes the overall, this is your base, price comes up, taps it, sells, stop loss above, in for the short, and then we're in for the short to downside, and you're in for a great trade. Look, at the end of the day, this is a really good scenario. Just we don't always get those scenarios, but we can see clearly what we're looking at. We've had a strong push, now we're looking for that continuation. So the great thing is we've left the footprint and now we're creating a base. Again, this is just a beautiful way of trading. And I mean, if you're not familiar with this, you know, you can drop me a message and I can obviously point you in the right direction to where I got my education and so forth as well. But, you know, it's all here. Everything you need to know is there. And then at the end of the day, we get a trade like this. Probably won't look so perfect. I think it could potentially come into a two touch with an internal three. And then you get something like this, you know, and it's more than enough, honestly, like perfection. I think this is in line with what I was looking at anyway, where we get that 1 2 3 and then it's like that. And yeah, just honestly, like that would be stunning. That would be so nice for even a Wednesday, Thursday trade. Don't care, I'll get involved in there. I'd get in as tight as possible, probably around about 10 12 pips, and then into the low I'm looking at roughly around about a 6 to 1 or further. So again, beautiful trades shaping up for the week ahead. We just need to be patient. I wouldn't worry too much about the, you know, I just wouldn't shift my bias. Actually, that's what I'm trying to say. I wouldn't shift my bias to look for long suddenly in this area, because we have to look at the higher time frame and we can see where the momentum is coming in. So we don't need to worry too much about these areas up here unless price just suddenly taps into that low, which again, it's very unlikely, taps into this low and then just shoots up here and we're in this territory here, and then we start creating something like that. Then okay, you can opt in to look for a potential long into those areas to then, you know, perhaps maybe even evolve this a little bit. But again, very unlikely scenario. We know where the value is sitting in this area here. We just need to wait patiently for the best entry, and then we can just get involved and we don't need to worry too much. A lot of the time why I'm saying this is, right now, if you got involved, you'd be getting positioned in these areas to go into potentially here, when in fact, if you just waited for that, you could then get involved in this and then you carry on and you don't need to worry about it as much. So it's not always the case, but a majority of the time it is when you're patient. So just wanted to kind of point out New Zealand CAD, again, another one which I think just didn't give me the perfect scenario of that tight flag, which is fine. I think right now it's becoming a little bit more of a steeper squeeze, which I'm not too interested in, I'll be honest with you. Structurally, this looks fantastic. I'm very, very happy with that. We still have a bit of a retrace potential in there where it can still come a little bit higher, which I think, again, at the end of the day, it's one of those ones where it's a bit steep. If it did that, and even now if it trickled and came in here and then sold off, I'm more than happy to stay out of that, because this is not my typical sort of scenario. You know, there's too many risks involved for something like that. However, what I am looking at right now is if this does do a little bit of a sell-off, comes in, creates that base, makes its way higher, and then we get some sort of drop off here, and then we get entries over here, that could be good for a short. Reason being is I'm a little bit zoomed in right now, I'll be honest with you, but when I size this up like that, and then I get something like this, I'll zoom out a little bit. that kind of makes a little bit more sense now. Is that the best structure in the world? Not really. And the reason why I kind of draw it on like that is because I don't anticipate this one looking perfect. It's not always the case where we get great perfect structure, but what we can see is the sequence. We can see expanding, push down, larger sort of mess of correction, push down, insurance entry in more for hover, not your typical insurance entry up here, but more for hover. And then you've waited for this very low risk trade. It's trading below all of that corrective price action there, and then basically you've got it, and then you can play that into this inflection point here, which likelihood is you're not going to be aggressive at this inflection point. You're going to be more so looking at that as your first target, and then price to break and continue to the downside. So positioning wise, this would be the best trade in this scenario for me personally, and that's what I'll be looking at. So then I can get positioned in there somewhere for, oops, yeah, even if I went with 10 pips, it's more than enough in that scenario. 10 pips, and then I'm trading it into there. I've got about 6 to 1, and then if it follows through, 9 to 1. So really good trade there. New Zealand CAD just needs time to develop again. Like I said this as well yesterday, a lot of the pairs that I have got on watch do need some time to develop, but I think they were the better pairs out of the ones that I did filter through. So sometimes we get this in the market, especially during 2023 and 2022. We did have a lot of corrective price action, and one of the struggles that I went through was the capital preservation and executional mode and switching between it, and then knowing when to actually be patient and take a step back and wait for structures to develop, and knowing when to actually be completely ready when market conditions have shifted. So what I would be doing is I'd be trying to take in trades in a scenario like this. Let's say the structure was a little bit better, and I was trying to short, I'll be trying to short in these areas, and then when price came up, maybe I would be trying to short in those areas, and then price would come up, and then I'd be trying to catch every little one. And then what happened was, it was very simple. That was a squeeze, it broke, and then let's say they had a continuation there, which was completely a part of the plan. That's where I should have been getting involved, not in here, 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 all these areas. And then I know that this is a part of a squeeze, but I would be neglecting that because I'd be just trying to get into a trade, when in fact the market is just very corrective and choppy right now, and I just need to take a step back. But the thing is, when I was filtering, this may have been the better looking pair of all of them in this part. Obviously, let's just say that I had a proper base and it looked better, but more in the sense, this would have looked really good, so I would have filtered it on. But then what happened was, by, let's say, by Tuesday, Wednesday, midweek, it didn't give me exactly what I was looking for, that push down from here and the continuation. Instead, it just carried on going up and then changed completely. And I would have done two things. I would have either written the pair off and completely lost sync with this particular pair, and then if I did come back, perhaps maybe I might have taken a loss or something, because I wasn't fully in sync, or I would have missed the trade where let's say we had a trade here and that was the trade I was supposed to take and I completely missed it. So those were just sort of little bits I wanted to point out, that sometimes it's better for you to be patient and wait for something clear that kind of meets your criteria, meets your plan, and ticks all the boxes. And sometimes it's better to just let things go. And sometimes it's very difficult because you might be looking at a particular pair that, for example, let's just say high time frame 1, 2, 3 looks phenomenal, looks good, and then you're trying to get the trade here thinking that's the one, it's really going to go, and then what happens, it gets corrective over the course of the week, and then by Friday it's ready and it just drops. Hey, it's one of those scenarios where you just need to learn well, you got to learn from it, basically, as simple as that. You just got to learn from those scenarios. So again, New Zealand CAD, very simple. We're within this expanding price action here, which overall is within a squeeze. So we need to bear that in mind as well, that this is not going to be that trade that just flies forever. It could just be the trade that does this and then comes to the downside, or even just gets very, very corrective, does some sort of messy behavior, gets to the bottom of that, and then sells and goes upside. You know, there's obviously you have to kind of see the market conditions, and these are not the best market conditions to be selling in, but at the end of the day, if the trade's there, the trade's there, and if it goes, it goes. EuroCAD. Now EuroCAD's nice because we knew that there was potentials for opportunities in there, but we knew we were going to stay away from that. What's good is we're actually breaking to the downside now, so all we have to wait is for simple continuation. Very, very simple part of the plan. We understood that we're very neutral with this. There's longs, there's buys, potentials, but what I see is momentum, continuation, no real signs of reversals at this point. The only time I would have been slightly put off with this was if this corrected, kind of dropped, got corrective, and kind of went into like a large correction into a large correction into another one, and then you had something like that breaking, that's when I would kind of get slightly put off, because it gets a little bit more difficult to trade, obviously if it's not a running channel, right? So right now the nice thing about this is even if that did develop, it would look pretty good, because you can see how you separate the price. You had this volume push, another piece of volume, a push, another internal piece of volume push, and now we're getting another piece of volume, and then we get a push, and then maybe another one, and it pushes and continues, and it's going with a really decent sequence, and it's respecting structure to an extent, but it's not perfect. So again, things looking a bit steep, structures are not looking the most cleanest, so we've got to read through price, and we've got to be aware of that when we are forecasting on these pairs. You know, we might see something a little bit like that, which if I did see something like that, I wouldn't hesitate on as much, because I've seen it multiple times now. So yeah, we're essentially just waiting for that continuation. Again, another one to be patient for. I think Tuesday, Wednesday, great time to be. Potentially tomorrow could be one to have on watch. CAD great. So we were looking at shorts to potentially come back into these areas. We didn't quite get it. This is a perfect scenario, as I mentioned. You don't want to be just writing a pair off right now because you didn't get what you were anticipating. It just means that we need to slightly evolve with the market. Let's have a little look on what's actually happening. Does this mean that this expanding is wrong? Not really, but it also means that this expanding may not be an expanding, and it could be an ascending right now. So price could actually be ascending to the upside when we were thinking it was expanding to the downside to potentially go long. So now we can actually shift our bias, but understand that there's still the aspect of an expanding in here. It's just this could potentially be a long and not a short right now. So what we can do is, and I am using the 5 minute here, but you can see how I filtered through the time frames to get there. We can set a base on here, and we can look at this a little bit more closer, and we can say, okay, fine, do you know what, if this is going to be a continuation here, let's treat it like a continuation, and let's wait for that base to be tapped in. And then if it gets tapped in, you could look in there, look for an insurance entry ever so much, and go like that, and then that's your trade. And I wouldn't really say that's terrible. If you did get a 3 touch there, potentially even better, but I don't think it needs a 3 at this point. It looks like it's shaping for a 2. I'll just go back to the 5, and yeah, we'll look at it a bit closer, and you may even get something like this where that's your sort of a bit quicker than we'd anticipate, but that's your internal sort of 1, 2, 3, and then you kind of just squeeze it. So don't start forcing things and being like, okay, it has to be this, but then you've got that level of an expanding in this part here where it completes the expanding for the middle section, sells off, taps into there, creates the low. You have your 1, 2, 3, and then it pushes up, continuation, and goes, or doesn't even give you that clean continuation, but gives you something a little bit more messy, and then it just goes. So I'd also bear that in mind, that you know, sometimes you know, the best place to get involved on the trade would be these areas, but at the same time you have to understand that it's a risk you have to be willing to take, because we're now assuming, because of what price is doing, that it's changed. It's no longer an expanding, it's actually a ascending channel, so it's ascending to the upside. But in fact, if we don't look at that, this could have just been a slight minor pullback, and what we're actually looking at is this is just a bit more of a deeper retrace, and it's hovering around about there. It took a steep retrace, and then it's going to continue to the downside. So yeah, there's that level of shifting that's required in the mindset to see both of these variations. But for now, I would be focusing on something like this, and I'd just be like, all right, sweet, you know, this genuinely could be an upside move now. And the great thing about it is when we look at something like the JP225, I start to think, well, in fact, this could be more on the side of an upside move now, because we've got that the JP225 is moving higher, then we've got CAD yen moving higher. What about EJ and so forth? Well, we can then put them all in a bundle, and not use them all as a comparison, because again, they don't all have to move in the same direction, but a lot of the time they do, and they do correlate together. So I'm going to be looking at them and cross correlating these pairs and seeing where the momentum's kicking in, and it does show that we are getting money flowing into these JPY pairs right now, and again, that means if there's money flowing into them, we're going to be seeing some movement. So looking at Euro Yen, I am looking for shorts on this, but at the same time I understand that a base can be created in these areas. So I do want to see a follow through from there, or a clear continuation through the low. What I do like about it is where I was originally looking for the base, we retraced and we're pulling back into the downside. What's nice about this, and I'm going into the 15 just to zoom in ever so slightly, not very much required, but if we do that and we come back in and we retest to this part here and then we reject and get an insurance entry, I wouldn't really not want to take that. I would then see this as structurally this is okay, this is completely part of the plan for me. More than happy to get involved in these areas here, to get involved in the continuation, and then I'd see it so as, and I'll zoom back out to the one, we can then see it has, we're trading through that low, we've then correctively created more continuation below, retesting the back end of all of that volume, then we reject from it, confirming that this is now forming as a base for the high, a resistance level, call it, and then we pushed away, give an insurance entry, and then I can get positioned in there. A reduced risk entry would also be preferred, but you know, if I can get the risk entry, I will. And then into the first inflection area, I'm still looking at about 13, 12 to 1, so that's still a pretty decent move that I will be anticipating. If this does just happen to sell off, then it is what it is. I'll then have to wait for the next trade and shape up for the next, but this is basically the scenario I'm looking at, and I'll just be waiting patiently. Again, this may not end up being like that. This could actually turn into an expanding and get a little bit more messy. It could, you know, drop off to around about here, you know, it doesn't really matter where this bottom is as long as we get it in and it starts to pull back up, and then we get that rejection on the insurance entry. So for a outlook for today, I think, you know, if I was going to take a trade today, I think I was leaning more on the EJ side of things. I'll be honest with you. I was looking at sort of this level here to see how price would respond, and if I was going to go with a higher risk trade, I would have gone in here and I would have looked for that insurance entry. And I think, you know, from a technical point perspective, there was that level of a head and shoulders here as well, and then we had this correction, and then you would have basically taken a trade off the back of that, probably on the 15. But again, not the cleanest sequence, wasn't really there for me, so happy to stay out of something like that. It's not really my go-to setup either. So again, I think what we have is, let me just go back and get that structure back on there, and yeah, here it is. So this is exactly what I'm going to be waiting for, to see how that shapes up, and if we get it, it'll be on watch for tomorrow. And yeah, maybe by London session, pre-London session, we might actually have the trade all sized up and ready, and we'll be good to go. New Zealand yen, so I was looking for continuation down here. We didn't quite get that, but we did weirdly enough get something similar on New Zealand US dollar. It's pulling back to the upside, and again, if we're looking at this now, this could potentially just be a part of a messier sort of range. So I'm not going to be looking to take any trade on this just yet. It hasn't really responded from anywhere significant as well. So again, this could just be a part of a very messy sort of price action. This can also be a part of something like that, and then it moves to the upside and it just has that gap there. It's completely fine. Price sometimes does things like that, and then we evolve with structure and then end up looking at it like something like this for the future, and we're just like, well, it is what it is. It just wasn't what we were looking for, and then in the end we had a 1, 2, 3 back into those areas, and that's what it became. So again, we just need to kind of read through price action. I wouldn't get too married to any particular pair. We need to just see price respond in a way that we can then take advantage of. So again, I'm not going to get married to that structure either, because that's not really the structure. I think more importantly, what we do need to see is what is price doing now, as we've not really tapped into anything significant, especially when I go to like the 4 hour. I just want to see more commitment, and again, it's just been squeezing. So if I was to even take a trade in this, I understand that this could just carry on going. Like where's the stop on this squeeze? We can't really anticipate it, but when the market starts to really move and it starts to trend, and we get those continuations, then you know, I know this is going to be the move I'm looking for. I just need to wait clearly for it, and I might get tagged in and out on break evens countless amounts of times, getting involved on New Zealand yen at this time on the pair. But the more important thing is we've tapped into value, so let's just give it some time and wait and see what happens. Aussie yen likewise, look, Aussie yen, I did need to see that level of continuation, but we're not completely in the long zone yet when I do look at these pairs, because if I just measure up here, borderline 50%. So as we approach that 50% area, as we can see here, it's then sort of hovering, and it then puts me in an outlook of two ways. Are we looking at continuation or reversal? Now it does become a little bit more neutral, because when we look at it from an origin point of view, that overall move to the upside has been retraced, and it responded and then pulled back. So if I do look at where price was directionally moving to, perhaps it was moving to there, pushed up, small little bit of volume, pushed up, and now we're creating more accumulation here. So the question is, are we creating continuation? And if we're creating continuation, then does this form as a good base for this to then move higher? Because right now the way I see it is we're just kind of hovering in these areas. So this is a good area, but this can simply evolve into so much, and then we get something a little bit larger, and then we kind of look back on that and we're like, okay, there was something there. But again, I'm not looking to just take a random trade in the middle of nowhere. I do want to see a clear base. I want to see some structure. I want to see some, some determined price action. So I'm not looking at the two touch on this. If this does respond from here and then comes back up into these areas and then comes back down and then goes, that's when I might be looking for the risk entry to the upside. Despite everything looking great, again, it's one of those ones where it just happened to pull back. Euro USD doing exactly what we need it to do. I know it's selling off a little bit quickly, and there was arguably a trade in there. Again, I'm waiting for the clear structure. I'm looking to get involved on this move, because I know that this will be pretty heavy on the momentum, but at the same time, there could be an abundance of opportunities within that run alone, especially with understanding AFT and the advanced Falcon side of things. I could probably get in with a very refined position, and something that I may have originally thought could be 7-8% could turn into a much larger position. And it's not what I'm looking for, but it's what I understand. So if it's there, it's there. Again, one of those ones which need a little bit more time of development, as we saw with New Zealand and Aussie US dollar. We're just going to have to wait. So if that develops and that gives me what I need it to give me, then great, I'm in, I'm happy. I just know that we're coming into news weeks, PPI, Fed Chair Powell speeches, this and that. It's one of them ones where I could just literally wait for the trade, shapes up around about news, and I just don't take the trade. It happens, honestly. Right, and one of the reasons why, if that shaped up and was perfect and news came out and I would leave it because it's in a good area, everything is there, but then it could just simply spike up and tap the next value area because of news and then sell off. And I'd be better off waiting till the news is over, because then I would have saved myself potentially slippage, small loss, but then at the same time I would have got positioned better. Price taps into this, rejects, insurance entry sells, and I got it on a better risk reward. I got in more protected, higher up in the run, etc, etc. It's one of those ones. So sometimes waiting can come with huge benefits, but at the same time you have to accept, when you do choose to wait, that you may not get the trade you're looking for, and you may miss a trade that you were waiting for. But it's part of the game, right? At the end of the day, these are the sacrifices you make in order to be consistently profitable long term. Adopting those ways of thinking are actually going to make you more sustainable as a long-term trader. But this is when you're trading prop firms. When you're trading on personal capital, you could take that risk depending on how high you're up on your account, etc. But I say these things from a place of experience, because at the end of the day, it's not worth it. No matter how much you might be thinking, taking a quick trade here and there during high impact news, let's say elections, the trade's there, shaping up, let me take that, hold it overnight, boom. You lose your account, and perhaps it took you 6, 7, 8 months to make that account. It could take you 3, 4 months, but you don't want to undo all that hard work. And again, I'm talking from experience. I've done that. I've undone hard work when, honestly, it's not nice. You don't want to be doing that to yourself. So let's move forward. So again, another one which actually looks pretty good is Euro Aussie. We just need that structure to form basically in line with Euro USD, which I do like. If they both shaped up, I'd definitely go Euro USD, because I'm going to prefer the spreads naturally, but they're both there. They could definitely, you could split the position, because I think for an Aussie pair, this one has potential, but I think Euro USD is way better anyway. But again, it comes down to preference. I think if I was going to filter through again, I would just choose Euro USD. I'm more than happy to take that over Euro Aussie, but we'll see. Looking pretty good as well. One of those ones where I think on the weekly we can see that we have kind of created that base there and we're kind of pushing away. So something to be kind of wary of. Fact of the matter is, we did have that bullish push. We didn't break it, which is good. We've retraced and then we're kind of coming back up. It just feels like one of those ones where are we building more bullish momentum, where this was just kind of a build up of buys and then we sold off a little bit early, catching people on the wrong side, and then we're getting more buys to just kind of continue to the upside. So I'm just kind of thinking of the psychology there, but what I do want to do is keep it very simple. I want to see a break above this, a push back in, continuation down there, and then we're playing into these areas, and then we'll see what happens if we continue further. So New Zealand Swiss kind of an iffy one, but again, this could shape up for this week. It's just on the weekly. The weekly would just basically look a bit messy, which is again one of them ones where it could not be ready for 2 weeks. It could just kind of come up here, come back down, retrace, come back up, and then do that. It kind of did something like this, but let's just wait and see what happens. Euro GBP is looking fantastic, really. It's doing exactly what we were looking for. So we've broken that low now. As we've broken it, we just need to see further continuation down here. So even if the continuation comes around about here, that's completely fine. Just need to wait and see. Again, we understood that it may not be our clear-cut trade, and it requires a little bit more patience. We did get that small little consolidation there that then sold off. Again, no trade for me. And then that, which isn't really much. And now we might be seeing what we need to see. Again, this, how I've drawn it, is a little bit large, but essentially I'm looking for that within here. There is some news coming out again, GDP growth rates, unemployment rates, this and that. We may not get the trade, it might just impulsively just drop off, or if, for whatever reason, comes back up higher and create something a little bit larger and a bit messier. But we've broken the low, which is more important, so we just need to look for further continuation. US 100, still waiting in anticipation for a sell. Again, if buys shape up here, I would have to read through it. Just the buy that I'm looking for won't be ready. It'd have to really just kind of come down here, hover, do something like that, and then eventually just kind of, give me what I need to over here. And then we'd have something like that, which would then lead me into like Thursday, Friday, but by then I'd have a clear message from the market. So again, I'm looking for just a strong random sell-off, break below here, continuation, and we go, which again, may not be ready this week. Aussie 200, so I was anticipating a short. We didn't get this, which is fine. We understood now that over here is where we're basically creating a base. This looks more so on my side of, is this going to trickle now, kind of sell off, come back down here, fill this low, come back up, insurance entry, and then it goes. And then this becomes one piece of its own where it's a little bit larger and messy, but we're getting something like this, and then it gets ready to go for the upside. So I'll be waiting patiently on Aussie 200. Again, one of them ones. It does look like there could be continuation in here as well when we do look a bit closer, where we could just say arguably that is your base. It's done what it needs to do, and then in here we're getting this sort of section region here, and we just need to wait patiently to see if structure does then form in these areas where it kind of comes in, does that, and then comes in for another one and goes, and then that becomes your trade. Again, not the one I'm looking for. I'm looking for the bigger move, and that's not the bigger move. HK50, I was looking for the tighter consolidation down here. Didn't quite get that, but that's fine because I'm not looking for that trade alone. I'm looking for this one. So whatever it does over here is fine. It could just do that. It can come in over here. And then if it does do something like this, I could look to entertain something like that. But once again, it's just where it's positioned. It's a little bit more difficult. I just want to see a solid sell-off. I want to see it sell through, break this low, create that continuation like we're seeing with a few other pairs. If we do get stuff like that, great. That's exactly what we're looking for. This is the scenario that I'm looking for on HK50, where we've broken the low now, and now we can just wait for continuation. We just don't have it just yet. We're still within this corrective range. It's undetermined. This can still go long and just be a part of this very, very long, extended, expanding that has not come to an end. And then the UK 100. I think the UK 100 is actually now moving to kind of convince you that we might be going long, which is not a problem because we basically sold off, tapped into that liquidity again, origin of that move, sold off, tapped into it, and now we're pushing higher. When I look at it on the hourly, it does look like that we're getting that insurance entry, but it's testing the back end of this. And at the same time, I think it's one where it comes with a bit of risk, and the risk is that you could wait for it, and it kind of does this. And I think if the trade shapes up like this, I wouldn't hesitate on trying to take a long. It's just situational. I think it does come at a bit more higher risk, taking the risk entry as well in there, and doing something like this just because of where we overall are. But then you are taking this to go long and then anticipating this to be a bigger move. So it's not a horrible trade. I just think that the overall picture is horrible. And this is not anywhere significant. It just kind of broke off, sold off, and then we're in the selling momentum right now. So it's a difficult one to really decipher, but it does look like price is turning from this point. I just saw that as a heavy sell-off. I was looking for continuation. We just quite didn't get it. Price is now just recovering from all of that sell. So we'll have a wait and see. This could be a later on today trade, or probably pre-London session trade personally. I will monitor this one a little bit more closely personally, because I think out of all the pairs on watch, this one would be the closest one to being ready. I just need to wait and see how it gets there, and then if it even does get there, I'd like to see what happens. And then if we do get something like that and it gets a bit more messy, then I'll take a message from the market. But I don't think that it's going to be such a difficult trade. I think it might just be very simple, where now that we've had two tops, we come in, we create the two bottoms, we get the push, maybe even a small insurance entry in there, and we go, and that would be more than enough. But again, it's one that requires deciphering. So yeah, I think we're looking at a lot of opportunity across the board. Again, there's so many things that could potentially happen this week, and there could be some phenomenal trades. So I would still stay sharp. I still wouldn't allow myself to get caught up with any sort of mess. Understand this as well. I just want to kind of point this last point out on EURUSD is, if this just started to rapidly move up to this direction, just wait for that push down, that trade right there, and that would be more than sufficient to see that really sell off, and you'd still take the trade in there for a pretty decent risk reward. In fact, you'd probably get a better trade if that was the scenario, just because of how rapid it might move. But this would be the most structurally cleanest entry. So yeah, guys, thanks for watching. That was basically Monday breakdown. I know there was nothing really exciting because it's more for the development week, but I think this is definitely comes into the mindset training for capital preservation, kind of thinking about the things that the skills that you will be required to sustain long-term growth and being patient. This kind of comes in the loop of just understanding that the positioning's not there. We could wait for better positioning. If we did wait for it, the risk reward is much better. The positioning, the protection, all of those things tick the box. So I understand the benefit of me waiting in these particular scenarios, and that's why I'm waiting, and keeping that sort of forefront mindset. You see the value here, and then you're looking at it. Originally you might have said something like this, and then you sort of kind of squeezing, and then for whatever reason you kind of then saw this as the area of value. But when you look at it as sequence, it was like, well, that makes sense. Price came up, pushed up, retested that, retraced, came in, and then you were looking for trades all the way on the way down. Once you can see it. And I think somebody messaged me recently on the last video and said, it's a bit, can't see the candles, you're very zoomed out. And I was like, that's a very, very interesting point, because I'm not actually looking at the candles, right? I could actually look at it like this. And that's the thing, when it comes to experience, at the end of the day, where and when you want to be looking at the candles. For example, I may actually only be looking at the candles in this scenario, and then I'll replay price back over here quickly, and then I'll just put it back. And then let's just say we've tapped into the retest or liquidity area of this. We've kind of tested this whole area here, and then I'm looking for price to trade back below that area. And then I can go to the 1 hour and I can look at it a bit closer. And now I can be looking at candles, and I can see here, like, okay, great. So price came in here, came in there, did that, took out liquidity, pushed off, created this continuation. Again, not one where I care much for the candles. I can then see this, and then I actually would have been able to take some sort of trade in there as well, maybe even a phase line entry over here on an order. and I'd be in for a trade here where, depending on how I managed it, but yeah, it ultimately ran for 5 and, you know, kind of hovered back and forth. And then over here as well on this trade, which I was looking at, where I then see it like that. And I think even with this one, I would have taken, personally, would have taken a bit of extra protection on it if I did take some sort of risk entry on it, but whatever. And then you would have basically seen it like that. Price came back up, tapped in there. You could have set your pending order here if you were on point, and then you would have just set it above. And then as price was up here, you knew if it retraced, it could have tagged you straight in. And then what happened was, boom, oops, I need to zoom back. And then you would have been tagged into that particular trade. Going back. Yeah, over here. And it would have been fairly easy to manage in some scenarios. I mean, that's the thing. Sometimes from being just smart and understanding what you're doing, you can get away with a lot of stuff. And you know, you can see as it hasn't really approached that low, you still have your protection above here somewhere, just waiting, not being too aggressive with 3%. And then as it did start to really follow through and commit, as you get to around about 5-6%, and you approach these lows here into that area, that's where you'd be more aggressive. Naturally around about 8%. So even though it dropped off to around about 10 something, you could manually close off at that point. I think it's a bit reckless, but you could then be more aggressive with 9% and just kind of be like, yeah, cool, I'm more than happy with that. If you were on the more longer term side of things, which I think is sometimes a lot more sensible when you're considerably up and you're not just trying to pass an assessment, you could have it running 10% and just have around about 7 locked in. So you're kind of looking at it in the sense that continuations in those areas, anything above that, I'm happy to kind of just let it be, and it's going to get messy. So then you're kind of looking for something like this, and then if you did get something like that, you could rein this back a little bit, give it some extra room, probably not that far, give it some extra room, and then, you know, price just does that and then just sells off, and then you're still in the trade, and then you manage it accordingly, and then you can play it into those high time frame lows. But yeah, ultimately I think pairs are looking good. There's a lot of opportunity. Take your time with it. Don't rush into anything. This week's going to be good. It's one of those times where I think capital preservation again is very, very essential. Shifting the bias as well. We knew that there was a lot of neutral thinking across pairs because we were looking at a lot of breakouts, but we also understood that we could get the reversal pullbacks for insurance entries. And I think right now it's giving signs that we are getting those sort of reversal entries with the insurance entries. And for that reason alone, I would say, you know, like I'm more than happy to shift my bias and look for this trade now and look for that to kind of play out and then take that entry, because at the end of the day, it's not the worst loss in the world if I did take it, but at the same time, it's very strategic, and I could probably get in with at least a break even and then manage that for, you know, 6, 7, 8, 9, 10%, and then kind of move on to the next one. So that's what I'm kind of really mainly looking at. Obviously stay zoomed out as well. I think that's one which is very important, because as we saw throughout this video, I'd be using the system where I'd be going from weekly, daily, 4 hour, and so forth. But sometimes I would skip time frames because I can already understand and I've looked at it multiple times. So I do apologize if you did see skipping the time frames a little bit, but most of the time, you know, you want to be starting all the way out here, quite zoomed out as well, so you can see the picture, see what you're looking at, and you know, okay, I don't need to be getting involved in these areas, even though there could be a trade here and there, yeah, whatever. Here's where the money's really going to be made for me. So I'm happier to kind of stay in there. Obviously, we may not make that whole run, but I could probably still get in there and I can manage it quite smoothly. And I'm looking to really experience these runs. And that's the way you want to see it. I want to be getting involved in a trade here so I can experience the run to the downside to potentially come back into those areas. Then you get that one, you get this one, you get this one, and then next thing you know, things just get very corrective. And then you're like, okay, well, I know that this is going to eventually come to an end and we may not even get there because of how price is moving. But then in different market conditions, I'll zoom out quickly. In different market conditions, we can then see the complete opposite. You know, we get trade, another trade, another trade, potentially another one, and then, you know, you're basically making your way all the way down here. And originally we might have been looking at something around about here, but then what happened was it just continued. It just ramped, and that's the thing. We don't know how soon something's going to end. Right, and if we always look at this to think, because I've seen sometimes these corrective channels just go for long periods of time, You know, that could have happened then, and then suddenly it's all the way down here. So again, sometimes things may not be looking the best, but sometimes they're there. But we understand that when you have corrective channels like this, they eventually do come to an end. Nothing lasts forever, unfortunately. But unless you're trading the S&P 500, then yeah, for sure. I mean, this probably is gonna it's gonna continue for a very long time. But yeah, so guys, thanks for watching, and I will catch